IMF's Communications Department. I am pleased to have Abebe Ambrose Selassie, Director of the IMF's African Department, and Amadou Sy, Assistant Director in the African Department, who will present the key findings of our latest regional economic outlook for Sub-Saharan Africa, titled Hard-Won Gains Under Pressure. Before we turn to Abe and Amadou, a reminder that we have simultaneous interpretation in French and Portuguese online and in the room, and the report and analytical chapters are now available on our website at imf.org/Africa. Abe, over to you.
Thank you so much, Kwabena. Very good morning to you and good afternoon to people joining us from the region. Thank you again for joining us for the release of the IMF's April 2026 Regional Economic Outlook for Sub-Saharan Africa. The region entered 2026 with the strongest economic momentum it had seen in a decade. And then came the war. How to hold the line, preserving hard-won gains while absorbing yet another shock, is a central challenge that our reports, authored by Amadou's team, addresses. Let me begin with some good news, which is, which needs to be recognized. In 2025, economic activity accelerated across nearly all country groups, with regional growth reaching 4.5%, the fastest pace in over a decade. This was underpinned by a combination of favorable external conditions and, more importantly, sound domestic policy choices. Countries such as Ethiopia and Nigeria have reaped the benefits of macroeconomic reforms, exchange rate realignments, subsidy reductions, and strengthened monetary policy frameworks. The results were also tangible in improved fiscal positions, declining inflation, and sovereign rating upgrades in several economies. Inflation has fell to a median of 3.4% at the end of 2025, down from 4.8% the year before. Fiscal deficits narrowed, public debt declined, and current account balances improved. In short, 2025 was a year of hard-won stabilization gains, and policymakers across the region deserve credits for achieving them. But as we enter 2026, these gains are under pressure. The war in the Middle East is a major new external shock. Oil, gas, and fertilizer prices have surged, shipping costs have risen, trade with Gulf partners has been disrupted, tourism and remittances are being squeezed, financial conditions have tightened, particularly for fuel importing countries. We have accordingly revised our growth forecast down to 4.3% in 2026, some 0.3 percentage points below our pre-war projection, and are expecting median inflation to rise to around 5% by the end of the year. The impact of the shock is highly uneven. Oil exporters will benefit from higher revenue, but remain vulnerable to volatility and the risk of pro-cyclical fiscal responses. Oil importers, particularly non-resource rich and fragile states, face deteriorating trade balances, rising living costs, and limited buffers. The human consequences are almost certain to be severe. Also important to note, this latest shock comes on the heels of the dislocation caused by the sharp and unprecedented decline in official development assistance, which is compounding all these pressures. We dedicate a full chapter to this, titled Aid Cuts in Sub-Saharan Africa. This time is different, and we mean it. Past aid shocks were largely cyclical, donor cuts, cut back and then return. What we are seeing now appears much more structural. It is falling hardest on the region's most vulnerable countries, fragile states, and low-income economies that depend on aid not as a supplement, but as a critical source of budget financing for healthcare and food assistance in many cases. Against this backdrop, policy priorities to be considered include In the near term, countries must keep inflation expectations anchored and do what they can to protect the most vulnerable through targeted, time-bound support. Fiscal strategies must balance credibility with flexibility. Oil exporters should treat windfall revenues as temporary and rebuild buffers, and oil importers must try and protect priority social and development spending while mobilizing domestic revenue, and there is real room to do so. Over the medium term, of course, it's accelerating structural reforms that is essential to unlock private sector-led growth. And our second analytical chapter lays out concrete reform options, such as improving governance, strengthening business environment, and deepening domestic financial markets. In a shifting geopolitical landscape, regional integration, particularly through the African Continental Free Trade Area, can boost resilience and open new opportunities. Productivity growth is the long-term prize. The responsible adoption of AI in agriculture, health, public services can be transformative. But realizing that potential also requires upfront investment in reliable electricity supply, digital infrastructure, and skills. Let me close by saying that the region has weathered crisis after crisis in recent years, but kept reforming and shown tremendous resilience. These gains are definitely worth defending, and the policy choices that are being made now will determine the extent to which these gains are preserved. As always, the IMF stands ready to support countries with financing, policy advice, and capacity development, and we are having discussions with all our country authorities that are here this week on these issues. Thank you so much.
Thank you, Abe. We will now turn over to you for your questions, but before we do that, a reminder of our ground rules. When I call on you, please identify yourself, your affiliation, and then please try and stick to one question so we can cover as many questions as possible today. And then also a reminder that we still have simultaneous interpretation available, so for those of you joining online, you can switch to either French or Portuguese if you need it. I'll start from the room. Gentleman here, Julian.
Thank you very much. Julian Samboko from Nation Media Group, based out of Nairobi, Kenya. Two quick questions. The original one is this. A number of African countries are now leaning towards revenue measures to cushion this shock, slashing VAT, slashing excise, beefing up subsidies. IMF is pushing back, especially where the fiscal space is constrained. Is there imminence of an omnibus intervention, such as a DSSI kind of ask, to cushion these countries in view of what's happening? Then secondly, on Kenya, any update on the conversations? The program is up in the air. Article 4 has delayed. Thank you.
Thank you. I see we have another one online on Kenya. Maybe we can go there. Kefa?
Kefa Mwirore, Nation Media Group, out of Nairobi, Kenya. And the questions is on country specific to Kenya. So the program, the status of the program, there's been some hesitance, more so on the part of the authorities and not the IMF in regards to whether we renew or sign up to a new program. If you would inform us how far those discussions have now come, how far they've come, and what to expect, especially with the hesitance that we've seen. And the second part of that question is the governance diagnostic program. If you would also offer an update, that was in 2025. Is it complete, and when can we expect the report on the same? Thank you.
Thank you. We'll read one more online question, and then we can come to Abe and Amadou. Abe, there's a question. Reports suggest that the IMF has uncovered hidden debt in Kenya that could derail possible fund-supported program. Is this accurate, and the reason the discussions have stalled? Abe?
Thank you. I'm going to take maybe the questions on Kenya, and then Amadou, can I ask you to answer the revenue question? Yeah. So first on Kenya, on status of program discussions, we continue to have discussions with the government, but the government is in this position where it's not unique to Kenya either. We see this in several other countries in the region and outside also. Kenya is, of course, a market access country, or shifting towards a market access country, and market access these days has become very, very volatile. And so the government is continuously rethinking about how to best address its financing needs. IMF, of course, is an option, but in the long run, of course, it wants to be a market access country. They've done a lot of liability management operations to push back, big lumpy repayments and, of course, flow service. And, of course, as market conditions become difficult, also been thinking about relying on IMF resources. So these discussions are ongoing. What I can tell you is that from our side, we've always congratulated the government for the strong effort that's been made to build buffers, particularly on the external front. But we also have been pointing out that there needs to be a path towards credible fiscal consolidation, and we would like to see that. So that's one of the things that we would like to see if for program discussions to advance. But we're having very cordial and very good discussions with the government. Second, on this hidden debt, I don't know what that's in reference to. What I can say is that our statistics department put out a report yesterday or last couple of days about the appropriate statistical treatment of certain types of government transactions, and I think this includes transactions to do with some of the levies which the government is collateralizing and borrowing against. And what the report was discussing is how it should be treated in public accounts. At the IMF, we believe that this should be treated as debt and have always done that. The government has shared that information with us in the past, and this report was simply reflecting on that. If this is otherwise in reference to the issue of payment arrears, again, we've known the outstanding stock of payment arrears. It's always been the case. We've not included them in our debt statistics because the government is going through a process of certifying these arrears, and that's very standard practice. As and when these are certified, they tend to get included in debt statistics, but there is no issue of hidden debt in Kenya that I'm aware of. Lastly, on the governance diagnostics, the draft report has been shared by our team with the authorities, and we're waiting for their comments on that before presenting it to our board and publishing it. Amadou, do you want to respond to this question about some of the effort that's being made to address the pressure by tax cuts?
Yes, so on domestic revenue mobilization, I think the principle is to mobilize revenue while having limited incidence on the poorest segments. I mean, as usual, two levers, tax policy, tax administration, are being pursued with capacity development assistance from our colleagues here, and also trying to rely as much as possible on digitalization if there are clear benefits. Another avenue also that is being explored is how to reduce tax expenditures with such as deductions, preferential rates, which are estimated to cost about 3% of GDP in the region. And finally, looking at some avenues like property taxation and so on. Yeah, I'll stop there.
All right, thanks, Amadou. Are there anything else to add? Or?
Oh, just on the, Julian, you asked about the BSSI type initiative. I mean, so what is under consideration, what we are discussing right now is how best to help countries that have asked for financial support. So as Kristalina was saying yesterday also, in many, with quite a few countries, we have programs, existing programs. So where governments are asking for more support, we are trying to see if we can provide more financing through existing vehicles, or rephasing access through those programs. That's the first thing that we're trying to do. And then we've also had a request for new programs, and of course we're going to initiate those in the coming days.
All right, thank you. We'll come to the middle. Erwan.
Thank you. Good morning. Quick question about the Sahel countries. We might assume that they might be quite impacted by the energy crisis, but also the fertilizer disruptions. I wanted to have your opinion about that and how concerned are you about the situation in those countries. Thank you very much.
All right, thank you. We'll pick one more. Nancy?
Thank you, Kwaben. I'm Nancy Nigeria. It's in Nigeria. I have two questions, one on Nigeria and the other on Africa. Having gone through the report, it credited Nigeria's efforts, the reforms, for supporting stronger growth in 2025. Yet it also shows that across the region, the inflation will be elevated to, I think, 5%. Fiscal deficit widening in several countries. The fuel price pass-through already increasing social pressure. At what point do reforms stop being stabilization gains? And that also becoming like a drag on welfare, where transmission to inflation and living cost is immediate now in Nigeria and socially sensitive, even as we're in a pre-election year in Nigeria. The other question on Africa, the report also noted that 1/3 of countries in Africa at high risk of debt or already in debt distress, while at the same time countries are being advised by you to protect social spending, invest in infrastructure, and accelerate reform. So how can countries really realistically meet these development needs when debt service is already crowding out fiscal space? Are we not asking government to do more with structurally less? And let me also add this. The report also noted that 20% increase in global food prices could push 20 million people in Africa into food insecurity across the region. What immediate tools do African governments actually have beyond targeted support to prevent this from becoming a full-scale social crisis? Thank you.
All right, thank you. Maybe we take one more Nigeria question. Nigeria, please, lady in the front.
Thank you very much. My name is Hope Musisashike from Business Day. Yeah, my question is, the IMF projected Nigeria's debt to GDP to decline to 32.3% in 2026. And considering the sharp rise in the country's total debt, up to about $117 billion, do you advise Nigeria to slow down on external borrowing? Does it still have more space for borrowing? Thank you.
All right, thank you. Abi?
Okay, thank you. Starting with the Sahel, I almost certainly there's going to be tremendous pressure on the countries in the region, particularly the Sahel. All of the countries, honestly, where conditions already were fairly difficult for various reasons, conflict, initial conditions in terms of per capita income and development challenges, so there will be pressure. Of course, at the margin, countries like Niger could benefit some because they export oil, Chad also potentially, but we expect that even that to come down the road rather than immediately. So the immediate effect will be quite a bit of pressure, including on food security issue that Nancy mentioned, aggravating those conditions either through the limited availability of fertilizer, expensive fertilizer, or even more immediately, as transportation costs have gone up, it's going to raise the cost of food, and so quite a bit of dislocation. So, we see that. We also recognize very much, we need to underscore, as I touched on in my opening remarks, we're already seeing quite a lot of increase in transportation prices that people are facing. Already transportation costs are very high for people in urban areas, rural areas even more. So we are already seeing quite a bit of a pinch from the crisis on people. It's impoverishing people, if it's making life difficult for people. Against this backdrop, what is it that governments can do given the limited fiscal space, given the constraints? I think first point I need to make, and I want to reiterate again, is we shouldn't underestimate just how much governments have done to try and position themselves better to weather more of these shocks. So in recent years, steps have been taken to stabilize debt, to reduce fiscal deficits, So that stabilization, I think, helps now when another shock like this comes, because there is a little bit more scope to try and defray the cost, the impact of this shock on people's livelihoods. So I think, in terms of policy response, it has to be very country specific, and even within countries, it could vary from region to region. And what we are trying to do is identify the amount of space that governments have to make interventions. Where interventions are being made, what we are pleading is that these are consistent with the medium-term objectives that countries have, and that they're not thrown off course by this, because that would be a double whammy for countries. Lastly, on Nigeria and the debt situation, whether there is room to borrow externally. Again, these kind of issues, whether to borrow externally, domestically, has to be seen in totality. Yeah? I mean, what's really important is, of course, trying to keep the level of debt as manageable as possible relative to debt service capacity, first and foremost. And then second, to do liability management operations that will make sure that you extend maturities. So it's difficult for me to answer whether to tilt borrowing structure external or domestic. I mean, Nigeria has fantastic DMO. They know how to manage these things, and depends on time and context. No? Thanks.
And then the food security question, maybe Amadou.
Yes. So on the food security. The one on protecting social spending. So this is a difficult task, of course, but it's also a signal that these countries that have this high debt distress have less cushion to absorb shocks. So in the medium term, the idea is to rebuild buffers and fiscal buffers and so on. But in the short term, there's definitely, in terms of spending, the idea is to reprioritize spending, protecting priority spending. That's one. And the other one is also to see how to improve the efficiency of spending. Two is, of course, efforts which we discussed earlier on domestic revenue mobilization, again, tax policy, tax efficiency. And finally, the capacity to elaborate policy, but also implement policy. And all of that will require difficult discussions, and communication is important, engaging stakeholders is important.
All right, thank you. We come back to the room. Gentleman on the far side, George.
My name is George Yafe from Joy FM, Joy News in Accra, Ghana. You were kind of trying to lower growth for the region because of developments in the Middle East. But are there any countries that stood out that have been able to build some reserves or buffers to withstand the shocks? I looked at Ghana's numbers. Earlier this year, you projected about 4.6%. Then the Rio or the World Economic document is talking about 4.8%. Is Ghana one of those countries that is standing out because of the fund program? That is one. But two, also going forward, there are fears that post-exit of this program in August this year, Ghana could be back again in terms of getting off track. Are you worried, or you think that you put in place the right structures to ensure that after they exit the program, there will still be discipline in terms of spending all those things? Because you've gone to the fund program, this is about the 17th time. So what comfort has the fund got when Ghana exit this program in August this year? And the final one, what is next for you? You are retiring in May this year. Where are you going to? All right.
All right. Thank you. Any more Ghana questions? Ghana? Maybe at those parts of the room? Yes, gentleman there.
Yeah, just to add to what George says, I want to find out from you what you, as we exit the program, what the fund actually is looking at. What are the tools that you think, if we put in place, we can sustain the growth that we have, and we don't have to actually come back to the fund? And do you actually think that, the quality and durability of this recovery that we see is one that, is good for the country? And what should these policymakers be looking out for, especially looking at the Iran war and its effect on the energy sector in the country?
All right, thanks. We come back to Abe and Amadou.
Okay. So on Ghana, on growth, where things are, I mean, we have been very happy to see the continued improvement in macroeconomic outcomes in Ghana in the last year and a half, couple of years, after the difficult crisis that the government had, with people of Ghana, of course, had gone through in 22-23. So that continued performance is really good, and it's on the back of continuing to implement the reforms that the government had identified as being important on the revenue side, addressing the challenges in the state-owned enterprises on the energy sector, clearing the path for recovery that we are seeing. Growth-wise, we hope that this can be sustained, and really for Ghana, I think it's going forward. It's really about how to make sure that the fiscal balance remains contained, and there is a continued balance between addressing development needs and avoiding that sustainability challenges. The program has, or the commitments the government made under the program have ensured that. So it's about sustaining that in the post-program period. You asked what steps we've taken to ensure that. This is not for the IMF. This is for the people of Ghana, for the government, for the private sector, for civil society to take. It's not for the IMF. And I think, hopefully, the lessons of the recent past hopefully will be salutary, and going forward, there will continue to be a decent path. But we're very optimistic about Ghana. I mean, the potential there, of course, is tremendous, and we're very hopeful that the economy will continue to grow from strength to strength. And on your question, just to note that there are rumors that I'm going to go play for Arsenal. It's not true. Maybe coach them.
Okay, so we come back to the room here. We'll start with the gentleman in the first row. Insa?
Thank you very much. Sorry. Talking about, in fact, I'm Imran Said. Yeah, I'm the permanent correspondent of the first private TV in Senegal, This is TV. And of course, we have learned that you are preparing your retirement, and we wish you a peaceful retirement. And we hope that you will witness also a new African sovereignty following your contribution to the North-South, South-South dialogue. Also, may this crisis and all what's happening now in this world contribute to fostering an understanding of the concept of interdependence. My question, following earlier clarification by the IMF on Senegal previously undisclosed debt progress, since last October appears limited in terms of progress. Senegal has expressed reluctance toward debt restructuring, while the IMF appears to view it as possible option. Is this a substantive disagreement, and how is it being handled in your discussion? And let me tell you also from a policy perspective, how do you assess Senegalese current debt sustainability outlook, and what concrete signals, whether in terms of governance, fiscal consolidation, or engagement with international partners, would you consider most critical to restoring confidence and conclude a new program with the country? Thank you very much.
All right, thank you. Any more questions on Senegal? Yes, Julian, first row.
Hi, my name is Magnus Sherman. I'm with Octus. On Senegal, the government there relies increasingly on the regional bond market. Does the IMF believe that these regional bonds should be included in a potential debt restructuring? And I had another question on Gabon while I have the microphone. You forecast Gabon's current account deficit to expand very significantly compared to the 2025 figure. Can you just explain what's behind that? Thank you.
Any questions on Senegal? Yeah. Or Gabon? Yeah.
Yeah, thank you very much, Julian Piquet, the Africa Report, Jeune Afrique. If you could talk to us about the real sticking points in the negotiations with Senegal. Is this mainly a transparency and credibility problem, after the undisclosed debt revelations, or does the fund now believe Senegal's debt burden requires a more painful fiscal adjustment than maybe Dakar is willing to accept? Thank you.
Thank you. Abe, will you take these ones?
Thank you. So where to begin on Senegal. So on the status of program discussions, we continue to have very, very good discussions with the authorities, including here this week. Fundamentally, we have, as we've said time and again, we really have congratulated the government for identifying the big challenges that they uncovered on coming to office. They alerted us very quickly and have been doing really very solid work to try and identify the totality of the misreporting, shared those assessments with us, also trying to identify what the root causes, the breakdowns in systems were, and we're grateful for that. So there's no issue about transparency of the debt stock, etc. Far from it. This administration has been incredibly candid and very transparent, and it's something that we've commended them for. They have, however, inherited a legacy of very significant debt, and the question now is how to deal with that, and what's the optimal way of dealing with that. And as I mentioned in response to a question earlier, this is a time where there's so much volatility in terms of market access, in terms of doing even debt sustainability analysis, because debt sustainability requires thinking ahead about what the economic outlook is, market access terms look like, and as this this volatile time for countries that are on the border of market access, it's work that requires quite a lot of diligence, quite a lot of deliberation. Going down one route that is irreversible is not exactly the ideal route to go. So, we've wanted to take time and allow the government time to come up with a program strategy that's going to be credible, financeable, and avoids too much austerity on the people of Senegal. So these discussions require quite a lot of reflection, quite a lot of deliberation, and first and foremost are for the government to develop. So we're at that stage, and those discussions are continuing. The regional market has been a source of help, and we have absolutely no view or no point to make about what the perimeter of any debt restructuring will look like. We never enter into those discussions, and don't think it's appropriate for me to comment, and typically have not ever asked domestic debt, etc., unless extremis to be included in any debt parameters. Last but not least, on Gabon, the current account deficit, there has been very significant increase in spending in Gabon in recent years, and investments that have been undertaken, and we expect that's what we are expecting to push the current account deficit to be wider than last year. Of course, since the projections were made, we've seen oil prices being revised upwards. So, we may have to revisit that, but that's what the wider current account deficits reflect.
All right, thanks. We'll go online now. We have Bessa Witt from Addis Fortune. Bessa Witt, if you could unmute your name and then your affiliation and your question, please.
Okay, my name is Bessa Witt from Addis Fortune newspaper from Ethiopia. So I wanted to know that if there would be an emergency special drawing right for Sub-Saharan countries, since there is a major shock to the economy. In addition to that, how will the IMF will support the countries in addition in the way that the governments are asking? And I wanted to know if the Ethiopian...
Bessa Witt, I think we lost you. You can also put your question in the chat and I'll come back to it. We also have another question online I want to take. It says on Mozambique and Lusophone countries, how are the tighter global financial conditions and exchange rate pressures, as well as the impact of the Middle East conflict shaping the outlook? And the questioner also wants to know generally what the outlook is for Lusophone countries. Anything on Lusophone countries in here, Angola, Cape Verde? Okay, Abi.
Thank you. So I think Bezaoit's question was about whether IMF is considering doing a special drawing rights issuance, and I'm not aware of any such discussions. Rather, as I mentioned earlier, what we are trying to do is at the individual country level to try and see how best we can help. As Kristalina has been saying, this crisis is different to the pandemic. Pandemic was something that hit all countries almost uniformly and required a uniform response by countries, by policymakers. This one is hitting countries in a very asymmetric fashion. Even in our region, we have oil exporting countries, as our report goes through in explaining. The response has to be very country specific and depending on how countries are being hit. So what we're trying to do, as I said, is with individual countries having very deep discussions and seeing how we can best help. On Mozambique, Mozambique basically is one of the countries where debt sustainability is borderline, and concerted reform effort is needed to try and move the country forward and address the development challenges the country has. And that's even before the latest shock. But of course, fundamentally, this is a country also with tremendous natural resources and stands to benefit from the exploitation of gas in due course once that starts being exported. So we're hopeful that there will be a framework in place that will help make sure that the country can benefit from that in due course.
All right. We'll take some questions from the room now. The second row, Palisa.
Thank you. Good morning. Palisa from CNBC Africa from South Africa. To what extent do you expect the geo-economic fractures to undermine South Africa's ongoing structural reform agenda alongside its new inflation framework? Thank you.
All right. Thank you. Then lady in the back, Kemi. Yes. Right.
Well, thank you. Before I ask my question, I just wanted to say thank you. I know you are retiring from the fund, and now you've handled some of the toughest crises, from Ebola to other crises in the past. So we will miss you. Okay, now to my questions. With the rise of AI, digital currency, and decentralized finance, how is the IMF advising African countries on the fiscal and regulatory challenges that this new financing system pose? In your report, you also mentioned AI. So could you talk about how you're advising ministers on how to harness artificial intelligence in their system? My other question, in your report, you also mentioned the impact of U.S. tariff on African nations, that it has been modest. However, regional trade among African nations is still very low, and due to high tariff. So what advice, what recommendation, and in the past year, how are you advising ministers regarding this? Thank you.
All right, thank you. Abi, so maybe we can take South Africa, the AI and the tariff question, and then we'll come back to the room for one last round of questions.
Sure. So on South Africa, like other countries in the region, I think it is, of course, being impacted first and foremost by the what's going on in the war, but more generally, kind of an environment where there's so much volatility in global economic and financial variables, and it's something that all our countries are going to have to get used to navigating in the coming years. I think there's a big shift in the global order, one where for the last 20, 30 years until around the pandemic, conditions were generally very favorable for our countries. Global growth was strong. There was a lot more certainty about the trading even peace environment, and that seems to have atrophied and creating a lot of volatility. So it's one of the things that we have to contend with. And policymakers, I think, in South Africa have been navigating it really very well. The inflation targeting regime in particular, I think, has served the country tremendously. That we've seen some fiscal consolidation, which is also beginning to bear fruit and helping stabilize debt, and market access terms are improving. So resilience, continuing to build on that resilience, I think, is the answer for South Africa and many of our other countries. I'm going to ask Amadou to weigh in on the tariff question, but on AI, I think we remain extremely optimistic about what it means. Yes, there are issues to do with preparedness that our countries need to work on, but I think fundamentally what it allows, much as the internet and access to information did for the region, what it will allow is level the playing field for human capital, knowledge to be as accessible to our countries, as it is for most other players. And I think I'm already seeing incredible strides in using AI for design of gardens, houses, etc., making tremendous headway in the region. These things are often very costly, so we see tremendous benefit. That's just the normal lives of people. In the government space, we're already seeing also quite a lot of efforts by governments to use AI to improve tax systems, to improve service delivery. So I think it's something that, managed well, should help the region converge faster, and not at all something to be feared, I don't think. Amadou, on the tariff?
Yes, on the tariff, so maybe I'll just focus on the African continental free trade area, and we've seen real progress, but uneven progress. So there are key negotiations to be concluded on issues like the rules of origins, tariff concessions, and that limits the effectiveness of trade as diversification as a shock buffer. But the long-term potential is clear, and it's about reducing non-tariff barriers, modernizing customs procedures, and deepening trade and services. And I would just add also having a look at the financing of trade, which is often overlooked, is a key area.
All right. I said I was going to come back to the room. We are running out of time, so just one last question, maybe to this side of the room. Lady on the first row, Nume.
Thank you, Kwabena, for taking my question. My name is Nume Ekege from This Day newspaper. Yesterday, Managing Director did mention that it's between 20 to 50 billion available in support to countries. Will there be any consideration of reducing IMF surcharges or lending for vulnerable economies, especially in Sub-Saharan Africa? Thank you.
Thank you. I bet that's the last question for today.
Thanks. As she also pointed out, that we are spending this week having intense discussions with authorities to see exactly how they want us to help, which is exactly what we are doing now. I think, as always, things like looking at the terms of financing, the tenure, etc., are things that take time. And time is of the essence for some countries in terms of the support that we can provide. So what we are going to try and do is use existing vehicles and roll out, other emergency financial support or new medium-term programs to support countries in the region. But, as she also stressed, this IMF basically is the institution that countries turn to at times like this, and we're, we've geared up and are having these discussions to see how we can support countries as quickly as possible.
All right, thanks, Abe. Unfortunately, that brings us to a close. I know there were so many questions we couldn't get to, but please send them to media@imf.org, and we'll try and get back to you as soon as we can. The report, as I mentioned, is now available on imf.org/Africa, so please go ahead and download it and send us any questions you may have. The spring meetings continue. We have the press briefings for the Middle East and Central Asia Department, as well as the African finance ministers today. And then tomorrow we have press briefings for the European and Western Hemisphere departments, as well as the IMFC. But before we wrap up, I just want to note, as many of you have also noted, this is Abe's last Regional Economic Outlook press conference as Director of the African Department. I mean, thank you. Thank you. I mean, over the years, we all have interacted with Abe, and his leadership and deep commitment to our region has really shaped a lot of what we've shared from this stage. So Abe, on behalf of the African and Communications departments, and I believe everybody in the room and online, a heartfelt thank you, and we wish you the very best of what comes next. Thank you. All right.
Thank you. Thank you, Kwabena. Okay.
Thank you so much. Thank you.